Okay, one more time. Good afternoon, everybody, and welcome to our Thursday, August the 11th training for Rubicon Indicator. This is Frank O'Connor. Again, are you guys still hearing me okay and seeing the screen? Just a final check on that, guys, if you would give me a yes. Thank you. Okay, thanks, everybody. All right, I've got the logistics out of the way. Let me jump right in. What we want to do is a couple of things, guys. Focus in on this particular market that we're dealing with here. Take a look at our charts. And the very first thing, obviously, I want to say a couple of very important things. One, in 10 years of trading the Forex market, which it has been for me, I have never, and I repeat, never seen the kind of action, price action, volatility that we have seen in the last couple of weeks here. You heard me last week suggest to everybody to either get on the sidelines or at the very least trade something like the Euro GBP, which is the one I recommended because it has less volatility than most of the other currencies. And let me show you the reason I'm saying that. Let me bring up that chart. This is a 1-hour chart of the Euro GBP, and many days this currency is moving. Yeah, let me go back in time a little bit, show you more what its norm is. You know, the norm is 60 or 70 pips. See it there. 60 or 70 pips. That's its normal range. It's a very tight range, easier to manage. Even though we have had wild swings in the other currencies, this thing has remained fairly stable. But having said that, a couple of days ago, this thing moved 200 pips. Extremely unusual for the Euro GBP. But look at today, we're kind of back into a relatively straightforward range. Even though the Euro Swissy ran 600 points and the USD Swissy ran over 400 points, today the Euro GBP stuck in around less than 90 pips. So that's my recommendation. We may see it fluctuate out. Usually if there's intervention in Europe, that will, or the United Kingdom, that will affect the Euro GBP. I still stick to that. Of all the currencies, this is the safer one for now, until we get into safe waters, guys. Now, again, fundamental news is what's driving our market right now. Our indicators are obviously reacting to that, but do not trade, please, guys, do not trade without having access to good information on fundamentals. Let me talk about that. What do I mean by that? At the very least, forexfactory.com. Daily FX is another good one. Free resources, news-wise, as to what's going on with the Forex market. Take it a step further. If you have cable, put on Bloomberg, CNBC, Fox Business, any of the business networks that you can get hold of as you're trading. Just have them running in the background, put the sound on a little bit, at least be able to view the screen and know that if there are major events coming up, you're informed and you can make informed decisions. My own personal setup, I have 4 screens. 3 screens are for trading. 1 screen is for news. I have a Twitter account up there, and on that Twitter account, I have Reuters, Bloomberg, New York Times, Financial Times, all those news sources coming at me on that 1 screen. I have my TV over to my left, and on my TV, I have usually Bloomberg and or CNBC, but mostly Bloomberg running on my cable. On my 3 other charts, I have charts. I trade off 1 computer, and I have 2 other free monitors for charting only. That's my own personal setup. I'm not saying that's what you have to have. I'm just sharing with you, particularly those of you guys who want to take this thing and run with it and be full-time traders. You've got to get the tools of your trade. That's number 1. Please, guys, get what you need to trade properly. Now back to our Rubicon. Like I've said many times before, and we may have some new people, so I'm going to say it all over again. Go back, please, and check out the webinars that are available, all the previous ones, and the trainings that are available on RubiconIndicator.com. Let's bring up, oh, sorry, let me bring up that site. Bear with me one sec. Oh, I'm sorry. I almost got it right. Rubicon Indicator.blogspot.com. I'm sorry. Or .com/blog. Either one will do. So let's leave it there and put in /blog at the end of that. And that will bring you over to the members only blog spot, which is this one. Oh, what did I do right there? Try that again. Here it is. And on the blog spot, you will see all the relevant information on how to trade the Rubicon. All the previous webinars, and also the links, guys, for the coming up webinars, the Thursday webinars. The links are available. RubiconIndicator.com/blog will give you access to all of this, and you're entitled to this as a member. Geoff put in some extra stuff here today. He was trading. That's the results from the trade room on August the 8th. For those of you who were in the trade room this morning, congratulations. You guys picked up some very, very nice pips with Geoff. They caught the Swissy move up, which was, I think the room took about 90 pips out of that trade this morning. So congratulations to all you traders in the Rubicon trading room this morning. That was very nice going, guys. Again, bring that up. It's very important. Please, guys, it's a free tool to utilize to your own advantage. Please take advantage of it, guys. Back to the task at hand. Euro GBP. Now, I want to show you one other thing. Let me go to the Swissy. USD Swiss. 1 hour chart. Here we are, and here's what was happening with the Swissy. And I want to show you the impact of government intervention. And that's the critical thing. When big banks and our governments, and particularly governments, intervene in our market, it is severe, and we have to know that it's coming. Here's the Swissy. USD Swiss had been driving down, and then we had 24-hour period here. I have a little tight range, as it looks like it was ranging down on the bottom here. Swiss government intervened, started buying up dollars and euros, and here's what happened. On the USD Swiss, a 460-point move in one direction, straight up. Look at the Euro Swiss. Do I have that? Let me bring that up, actually. I want you guys to see this one. Where's my Euro Swiss chart? Here we are. Same scenario. You can see how these charts look pretty similar. Here's the Euro Swiss. And this little range right here as it's bottoming out. The Swiss government intervenes. Now look, 650 points. 650 points on the euro. Unbelievable. Our guys were down on the 30-minute chart in the trade room this morning, just as we recommend. Let me get Rubicon Indicator going here. There's a signal coming in on the on that same trade. It comes through the spine price action. The blue line, aqua blue line, our railroad track comes through. There's our entry point. Bing. There's your 90 pips that the boys picked up this morning in the trade room. That's on the Euro Swiss. I think they actually got on the USD Swiss. Let me do the same thing over here. What I'm doing, guys, is going into the Rubicon Indicator. Click on Edit. This is where you can go back in time and put in the date and take a look at what the indicator was doing past tense. So you can see in here, I have the 0601 and the time, and that gives me where the Rubicon signals were on that date at that time. If I want to come back to today, go to that reserve tab, blank it out, click OK, and that will bring you up to the signals that were available today. I want to get down to the 30-minute chart. And that is the signal that you guys picked up, whoever was in the room this morning. It came through. Entry point was here. That was the first entry. And then off she went. But the signal was right there. Now you have to be very careful here, because on these particular trades, look at the stop loss. The stop loss on the USD Swiss was about 60 pips away. The bigger the range, the bigger the target, the bigger you have to allow. The trouble with this type of volatility is that you can get caught because the volatility is whipsawing. I was on Daily FX, most days I'm on there actually. Some of the professional traders, the guys over there, were getting hammered, and these are professional traders, because of the type of whipsaw action that was going on, particularly in the euro dollar. It was spiking 100 pips in both directions within a couple of hours. That's pretty difficult for anybody to trade that. That's why I'm saying, guys, be safe. Get down to the Euro GBP until we know that all of this government intervention is over. Another example of government intervention, USD Yen. Here it is, 4th of August. Let me go back here. USD government intervenes. This currency is sitting down here. In one spike, we rise up 380, almost 400 pips. That's government intervention. The Fed intervened. This week, the Bank of England intervened. I'm sorry, there was major news out of the Bank of England. I'll show you that actually on my Euro GBP. This spike up here, not quite as dramatic as the other stuff. That's the spike up on British news yesterday. So that's what I'm saying. You have got to be cognizant, guys, of major news events. This is a very tough market that we're in. Either stay on the sidelines or trade only the Euro GBP until we get back into safe harbor. That's my recommendation, guys, and please hear me on that. There are professional traders right now who know exactly what they're doing, who are getting seriously hurt. I don't want that happening. Once our market comes back to close to normality, all of our indicators come back to normal, we're good to go. I'm not saying you cannot trade in here, but you better know what you're doing. Now, having said that, I want to show you something. This is very important. On the psychology of trading in this type of market, let me just throw on a YouTube video here for a moment. Just one sec, as this video, we're going to watch it, guys. Take 2 minutes.